Welcome to this explainer. If you've ever looked at a massive global business and thought, how on earth do they structure all that financial data from scratch? Well, you are in exactly the right place. Today, we're diving straight into the sources to uncover the ultimate blueprint for designing a multinational corporation in SAP.
Put yourself in the driver's seat for a second. I want you to think of yourself right now, not just as a viewer, but as an incoming SAP consultant. Your actual job is to architect and troubleshoot these incredibly high-stakes enterprise systems. Every single configuration choice you make dictates exactly how thousands of users interact with the system globally, and literally how money flows through the corporate veins. So, here is our architectural roadmap for today. We've got enterprise structure basics, controlling risk and operations, managing time and status, chart of accounts mastery, and finally, real-world consultant scenarios. Let's dive right in. Section 1, Enterprise Structure Basics. Let's start right at the top of the global boardroom.
It's kind of fascinating to see the distinction between two terms that sound basically identical to an outsider, but are completely different beasts in SAP, the company and the company code. A company is the absolute highest organizational unit. It's a massive umbrella used purely for consolidation purposes. Underneath it, you have the company code, which is the smallest organizational unit. This is your actual legal entity where the real financial accounting entries, things like your balance sheet and profit and loss statements, are generated. Remember, no accounting entries happen directly at the company level. They all happen down in the company code. To put that into perspective, imagine you have a global conglomerate called ABC Group. That is your overarching company. Beneath that massive umbrella, you have your regional operations, ABC India Limited, ABC USA Inc., and ABC Germany GmbH. Each of those regional entities operates as its own distinct company code. This setup allows the individual branches to handle their localized day-to-day legal accounting, while the parent ABC Group can roll it all up for a consolidated global view. Now, you might be wondering, why must we explicitly assign the company to the company code in the system? Well, the source material points out that if we miss this vital step, which, by the way, is configured using T-code OX16, group reporting and consolidation simply cannot happen. The system literally wouldn't know how the regional financial data naturally flows up to the parent company. Moving right along to Section 2, Controlling Risk and Operations. Now that our legal entities exist, we need to protect them. Let's talk about the credit control area. As a consultant, you assign this to your company code to actively control customer credit limits. And why does this matter so much? Because without this specific assignment, your customer credit checks will completely fail. Your business could blindly lend products or services to bankrupt clients, resulting in massive bad debts. No way we want that. It's actually very common in multinational operations to have one central credit control area managing multiple company codes, just to keep that global financial exposure strictly in check. Okay, let's see how this builds our internal reporting. We need to classify how the enterprise operates from the inside, right? We do this using business areas and functional areas. A business area represents your operational segments. Think specific product lines, branches, or divisions, like separating your retail arm from your manufacturing arm. A functional area, on the other hand, classifies expenses according to their business function for cost of sales accounting. So that's distinguishing between production costs, sales costs, administration, and marketing. Section 3. Managing time and status. With structure and risk sorted, we've got to dictate exactly how users enter data. You absolutely have to get these next two terms straight because people mix them up constantly. What's the real difference between a field status variant and a field status group? Well, the variant is a collection of groups assigned at the high company code level. It determines broadly if a field is hidden, optional, required, or display only during document posting. The field status group, however, is assigned directly to individual general ledger accounts at the master data level. SAP takes the posting key and combines it with this field status group to determine the exact field behavior a user experiences when they're making an entry. Now let's talk about time. SAP manages corporate calendars using fiscal year variants configured via T-code OB29. You've got three main types. Year-dependent variants must be maintained separately every single year. Year-independent variants use the exact same calendar year over year, kind of like a standard January to December schedule. But pay close attention to the shortened fiscal year. This one is absolutely critical during massive, chaotic corporate events like mergers or acquisitions, where a legitimate financial year might just be a few months long. And that brings us to a magic number in SAP, 16. A normal fiscal year variant doesn't just have 12 months. It has 12 standard posting periods.
plus 4 special periods. That equals 16 total periods. So why the extra 4? Those special periods are dedicated entirely to year-end closing activities. They allow the finance team to post final entries and audit adjustments without messing up the clean operational data of the standard 12 months. All right, Section 4, Chart of Accounts Mastery. It's time to build the financial dictionary. The chart of accounts is simply a list of all the general ledger accounts used by your enterprise. But there are strict rules here. A company code can only ever have one operating chart of accounts assigned to it. However, the reverse is incredibly flexible. That single operating chart can actually be assigned to multiple company codes all across the globe. You also have a group chart of accounts for your consolidation and a country chart of accounts for localized country-specific reporting. Now, the way we organize those accounts is pretty clever. We use an account group. When you're creating a new general ledger account, the account group dictates the exact user experience and boundaries. It controls the specific number range you can use, the screen layout you see, and exactly which fields are required or optional during the creation process. It is literally the ultimate gatekeeper of your master data consistency. And here is where things can break catastrophically: the retained earnings account. During year-end closing, SAP takes the profit and loss balance and automatically transfers it to the retained earnings account. But if this account isn't maintained and linked properly using T-code OB53, year-end carry forward simply cannot be executed. SAP throws a hard error and the entire process crashes. That is incredibly high stakes for one single configuration step, right? Section 5. Real-world consultant scenarios. Let's tackle some actual emergencies. All right, let's step directly into the shoes of the lead consultant and tackle a real support ticket. The client calls in absolute panic. They say, users cannot post accounting documents. This is a massive, system-wide failure. Global operations are grinding to a halt. As the expert, where do you even check first? Well, the source material makes one thing crystal clear. We don't guess. We need to follow a methodical hierarchy. First, check T-code OB52. Is the posting period even open? If it is open, check user authorization. Do they actually have the rights to post? If yes, look at the company code assignment, then verify the fiscal year variant. If those are solid, check the document number range using FBN1. And finally, look at the general ledger account status and the field status variant. Notice how finding the fix requires a deep understanding of the entire architectural blueprint we just built together. It's all connected. Let's take a look at our second ticket. Imagine a user is staring at their screen, just trying to finish up and go home for the day, but they can't post an entry. Instead, they get this classic, deeply frustrating error message: business area is a required entry. They don't have a business area for this transaction, and the system absolutely won't let them bypass the screen. So how do you troubleshoot this one? Here is your battle plan. Step 1. Check the field status variant assigned to the company code. Step 2. Check the field status group assigned to that specific general ledger account. Step 3. Review the posting key configuration. Now, here is the ultimate consultant move for Step 4. If the business decides they don't actually need that business area field, do not just switch it from mandatory to optional blindly. You must execute a full impact analysis first to ensure you aren't completely breaking their internal reporting downstream. Okay, let's bring it all together. As a consultant, you don't just memorize a bunch of random technical T-codes. You are architecting the actual flow of global business. By mastering this interconnected blueprint from that massive top-level company down to the lowest field status group, you make yourself absolutely formidable in any interview and highly effective in any global deployment. So, with this foundation officially laid, what part of the enterprise will you build next?